Hello and welcome to the Capital Markets on Channels Television. I'm Edidiong Iwang. We begin the show with a review of the markets. Now, although 2 of the 5 trading sessions were positive, the gains were not enough to lift the markets back into the green as the local bus suffered its 6th consecutive weekly loss. The all-share index declined by 1.74% week on week to close at 38,648.48 points, bringing the year-to-date return further into the negative territory, settling at -4%. Activity levels were also weak as volume, value and deals declined by about 22.6% and 30.7% respectively. Sell-offs in bellwether stocks such as UBA, MTN Nigeria, Zenith and GT Bank drove the weekly loss. Sectoral performance was broadly negative as the industrial goods emerged as the week saw gainer, while other sectors declined. Well, joining me now to review the market further is Pius Nwadu, the head of wealth management at PFI Capital. Good evening, Pius. Thank you for joining us on the program.
Good evening, Edidiong. Thank you for having me.
So let's just begin with your reactions to the current bearish sentiment we've been seeing in the equities market lately. What do you think of that?
Okay, the bearish sentiment in the equity market has lasted for the past 6 consecutive weeks. Despite an impressive start by the market in January, as at the last trading day in January, the market had already gained 5.32% for the year, in addition to the record 50.03 gains in 2020. However, the weekly bearish sentiment started from the first week of February with the market plunging by 1.66% that week. This was followed by 3.04%, 0.63%, and 0.96%, 3 consecutive declines from the remaining weeks in February. In summary, the market lost about 6% in the month of February alone attributed to the continuous spike in fixed income yields. This loss was extended to the first 2 weeks in March, despite fair earnings releases by some companies in the NSE.
The audio. So what factors do you think contribute to the downturn despite fairly good earnings from, some companies?
Okay. One of the major factors is the continuous upward movements in yield in the fixed income markets. Starting from the beginning of the year, both institutional and retail investors have found rates attractive compared to the risk-adjusted dividends yields on the NSE. Other factors remains the persistent outflow. Other factors remains the persistent outflow of foreign investors away from the markets. From the latest data released by NSE on foreign investors' participation, it was reported that foreign portfolio participation has reduced from 25% in December to 20% in January. It has also been the usual occurrence starting from late 2019. Notably, the value of foreign portfolio outflow has consistently been greater than inflow for the past couple of months. Specifically, the foreign inflow for the month of January was estimated at 21.14 billion naira, while 48.78 billion naira was estimated to be outflow. Also, to compound the situation, the recent spikes in treasury yields in the US is also a factor driving away investments in the equity markets, which also trickle down to our local markets.
Well, as 2 of the Tier 1 banks have released their results, what are your expectations from, the other lenders? We've seen a mixed bag. Zenith Bank's results and UBA. So what are you expecting to see from, the remaining lenders that are yet to release their earnings?
With regards to that, so far, the results released by companies in the banking sector are relatively impressive, bearing in mind that the impact of COVID-19 on businesses in the reporting year of 2020. For instance, Zenith Bank grew its net income by 12.23%, and other non-income interest, non-interest income by 30%. It also generated an impressive 230 billion naira profit after tax, and also declaring 3 naira total dividends compared to the 2 naira 80 kobo that it paid in 2019. Similarly, UBA also grew its profit after tax by 27% from 89 billion to 113 billion naira, but with lower dividends of 52 kobo compared to the 1 naira it paid in 2019. Hence, we expect the likes of GTB to replicate Zenith Bank's impressive result based on historical observation. Access Bank is also expected to declare impressive results at if you look at their growth trajectory since post-merger with Diamond Bank.
So let's talk about sectors now. What sectors have stood out, the most so far, from January till now? And do you have any idea what's driving that?
With regards to the sectors that have stood out so far, with regards to the with regards to the sectors that have stood out so far, we are seeing, due to what is happening in the market right now, with regards to the insurance space, we know that currently what is going on in that space has to do with the better the current results that they have posted in the market recently. That is one of the basic factors that is driving the sectors we are talking about.
Okay, so let's move to the fixed income market now. What are your reactions to, the upward movement we've seen in yield in that space, especially the bond market?
Okay. In the absence of any catalyst to spur positive market performance, we expect a weak performance for the next couple of weeks. We, however, expect some renewed interest once the sell-off bottoms out because the ASI is currently in the oversold region. Based on the relative share technical indicator, it has dwindled a lot. So with the rollout of vaccines across the emerging developed markets, coupled with the upticks in crude oil prices, we expect a reversal in the downtrend, possibly in the second quarter of the year. The also the 1.9 trillion virus approved by the US president yesterday is also expected to flow into some emerging and frontier equities markets like Nigeria.
Okay, so I mean, you're talking about the projections for the fixed income markets, as you mentioned in the second quarter. But so far, how would you say that that market has performed this year?
Okay. So far, as we know, the market started the year with upward movement in yields.
to the demutualization, we know that this week the NSC...
Hello?
Can you hear me?
Okay. Well, yes, I can.
Okay, so do you want to continue with your review of the fixed income market, or we lost you?
Okay, go ahead.
Okay, so let's just talk about the demutualization now. This week, the NSC secured the final approvals from the Securities and Exchange Commission and the Corporate Affairs Commission, you know, the final approvals for the demutualization process. Now, how do you think that this demutualization and then the new online listing would impact markets?
The final approval of the NSE demutualization is significantly a milestone for the exchange, the entire capital market. In my opinion, the exercise will provide an avenue for the exchange to achieve greater efficiency in all its core activities. The group's listing on the exchange makes the current ownership stakes credible, while also providing an avenue for capital rise, for the ownership, for them to like raise their capital should the company need financing. This also spur greater accountability through better corporate governance and reporting. On the part of the X filing platform, which has to do with the listing online, we believe its successful implementation would encourage more companies to be listed on the exchange, as the bottleneck associated with listing and filing would be reduced drastically. Ordinarily, Nigeria, as the biggest economy in Africa, should have an exchange that can be compared with its peers, such as South Africa. But the size of the exchange as a ratio of GDP has remained so low as a result of structural rigidities and administrative bottlenecks. We believe that this would accelerate the growth of the exchange.
So with this now, what are your projections for the equities market?
Okay. In the absence of any other catalyst to spur positive market performance, we expect a weak performance for the next couple of weeks. However, we also expect some renewed interest once the sell-off bottoms out because of the ASI is currently in the oversold region, like I've said before. With the rollout of vaccines, and then since people are getting vaccinated and all over the world, we are looking at, and also with the increase in the price of crude oil, we expect the equities market to reverse its current position by the second quarter, like I said, of the year.
Okay, let's move to the fixed income market now. So, I mean, we're expecting the equities to reverse that, but what are you expecting? What are your projections for the fixed income market?
Okay. With regards to the fixed income market for this year, we have seen so far that this year is a complete overhaul of the fixed income markets. Yields have significantly increased across the fixed income space, from the local bond to the Euro bond and also the treasury bills market. Notably, the 364 days treasury bills yield as at close of 2020 was 0.72%, but has rose to 4.60% following CBN's hawkish stance. The Eurobond market has also experienced some marginal increase in yields, despite the significant increase in oil price. This is generally pointing towards a reduced 7 risk rating in government borrowings.
So let's just talk a bit about inflation now. We've seen inflation on the rise. How is that likely to impact the investment environment?
Um, the inflation definitely it erodes investments overall. So that's basically one of the factors that CBN considered in increasing the fixed income rate yields that we have been experiencing so far. It's also to tackle the inflation that has increased from up to 16.47 that we currently have right now. So the increase in inflation is also has a direct relationship with yields. That's why we are seeing the yields in the fixed income space tending towards an increment, higher numbers.
Market is PFI Capital focusing on now? You know what I mean? With everything that's going on in the economy, what is PFI focusing on to manage investors' funds?
Okay. Presently, as a diversified investment group, we are currently and constantly monitoring the markets to ensure an excellent risk adjustment returns on our for our clients. We have a diversified portfolio that cut across the local and international markets. Since we conduct asset reallocation across asset classes and markets as the need arises. We also have access to, like we mentioned earlier, we also have access to 53 foreign markets. We monitor this market constantly in order to scan out for opportunities to create value for our clients.
Let's just talk a bit now about the budget. How do you think the government can utilize the capital market, you know, to fund the budget?
We believe there are opportunities for the government to finance its activities, both in the domestic and the foreign market space. The structural issues driving away investors, foreign investors, would, however, need to be addressed if the government is to attract cheap funds. The issue of exchange rate stability has also become a major factor driving away foreign investors from the markets. If the government can tackle structural issues, it would not only attract foreign portfolio investors, but foreign direct investment, which has significantly reduced for a while now.
All right, Pius, thank you for your input on the program. Pius Onwadu is the head of wealth management at PFI Capital.
Thank you for having me, Vivian.
Now we'll move on to the International Women's Day, and the capital market was not left out in the celebration as the Chartered Institute of Stockbrokers on Monday held an event to celebrate the women in the Nigerian capital market. The event had in attendance the first female Director General of the Nigerian Stock Exchange, Professor Ndi Okereke, the first woman to be licensed and inducted into the stockbroking profession, Mrs. Elizabeth Ebi, and some other senior stockbrokers. Now, while commending gender equality in the market, Professor Okereke mentioned that women have contributed a lot to the growth and development of the Nigerian capital market, which she says deserves celebrating. Let's take a listen.
What we are doing here today is a celebration of our profession of stockbroking. You didn't hear anybody in the speeches, nobody said give the women a chance. Because in the stockbroking profession, it's open to as long as you have passed that exam, tedious exam, the men give you every opportunity as a woman to excel. And vice versa. The women also give opportunity. The women that are older in the profession, like me, give the equal status and attention to both the men and the female stockbrokers.
Awareness needs to be created amongst the women and the younger ones, so that people can appreciate the value of being a securities dealer or a stockbroker, knowing that it is the foundation, for wealth creation in any economy. And it is a profession that you belong to and you will never lack. And you will be the one dictating issues, within the financial industry and promoting the economy of the market and of the country.
At the very, very beginning of the market, for the first 10 years, we had a market that was fully dominated by women. And then with time, that trend changed. Now we have a situation where we now have a significant number of women in the profession. All right, the number is still growing, though we have not gotten to where we intend to be or where we ought to be. Less than 30% of the membership body of the Chartered Institute of Stockbrokers are women right now. We would very much like to get to the point where we achieve 50%. All right. We will also like to have a situation where the number of women on our governing council increases geometrically.
Well, the African Development Bank has launched its 2021 African Economic Outlook with aims to examine the continent's growth performance outlook and present the socio-economic impact of the COVID-19 pandemic. The launch of the report with the theme From Debt Resolution to Growth, the road ahead for Africa, was attended by AFDB President Dr. Akinwumi Adesina and governors of the banks, representatives of diplomatic corps, and researchers and industry experts. According to the bank, one of the most significant consequences of the COVID-19 pandemic has been a rise in the borrowing needs of African governments to cover expenditures induced by the health crisis.
What's even more alarming is the structure of debt, where the debt right now is largely, Joe, most of it is largely in the hands of commercial creditors, almost $337 billion, in terms of private creditors and also those that are the private creditors without any types of securitization for it. So that's very, very worrying indeed. And the other thing that I will see in the report is the fact, Joe, that the official development assistance, bilateral assistance, has actually plummeted. You look at it in 2000, it used to be 54% of Africa's debt stock, rise down to about 27 or so percent. And you look at, as that is happening, people are going off to the international capital market to go borrow. 17% was what it was in terms of commercial creditors in 2000, now is 40%. And that is where we have a challenge.
And just before we end the show, we'll just look through the market numbers, which suffered its 6th consecutive weekly loss as the all-share index declined by 1.74% week on week to close at 38,648.48 points, bringing the year-to-date return further into the negative territory, settling at minus 4.0%. Activity levels were also weak as volume and value traded declined by 22.6% and 30.7% respectively. Sell-offs in bellwether stocks such as UBA, MTN, Nigeria, Zenith, and GT Bank drove the weekly loss. Now, on the sectoral performance, it was broadly negative as the industrial goods counter was the sole gainer for the week, while other sectors declined. Well, that's it on the program tonight. Thank you for watching. I'm Edidion Iwang.